So welcome back traders to another exciting video. In this video I'll be sharing with you guys some tips on how to trade the trendline strategy. Stick around to the end of the video and you'll understand what the trendline strategy means. So let's jump right in. So when we say the trendline strategy, what comes to your mind? So this is what we identify as trendline strategy. When we come to our charts, the first thing we want to identify is what's the overall direction of the market. What's the bias of the market? Is the market trending up, down, or moving sideways? So let's use pound JPY as an example. So once we come to our chart, the first thing we did is to draw out our trend line, and this is what we identify as our trend line. Price has been trading above the trend line. Price is not breaking below. Price is making higher high, higher lows, higher high, higher low, higher high, higher lows, and this is an uptrend. If you have been trading for a while, you understand that when price is making higher high and higher low, the trend is up. Price is trading up. Price is making higher high and higher lows. Price is not breaking below this trend line. And some of you ask the question, how do we draw our trend line? Okay, to draw our trend line, we need to account for as many weak rejections as possible. So you can see multiple weak rejection here. Whenever price got close to this level, can see multiple weak rejection, and I don't know how to explain this for you in a simpler term, but if you have been trading for a while, you will know that if the trend is up, this is the structure that will be formed: higher high and higher lows, higher high and higher lows. And that was why we'll draw this trend line to account for as many weak rejection and level as possible. So as long as, let's say, price did not break this level, if price was respecting this trend line, we are only going to be focusing on buying the market. We'll buy the market all through. As long as this level, this trend line is respected, we are only focusing on buys. But the only time we sell the market is when this happens. When price violates this trend line, we have drawn, and this happened at this level. Price broke this level very strongly by this bearish candle. And after that break, and remember, price need to break and close strongly below the trend line, because once price start pushing down and you just sell the market, we might get a huge weak rejection and price will still close above the trend line. So if you are going to trade the trend line strategy, you need to wait for the candle to close. I personally like to wait for at least 4-hour or 1-hour time frame candle to close below the trend line, so that it will validate that the trend line has officially been broken. Because if you scale down to your 15 minutes or 5 minutes and start seeing candle close below the trend line and you take a sell, there is high probability price will reject the level and only leave a weak rejection and close above the trend line. So look for higher time frame like the 4-hour or the 1-hour time frame candle to close below the trend line before you can take your trade. So let's go back to the analysis. After the 4-hour candle close, which is this candle close strongly, let's scale down to the 1-hour time frame to see. So this was the candle, this was the 4-hour candle that closed below, and after the close, what do we see next? Price pulled back to the area for a retest. Price pulled back to that area for a retest. It's a high probability after a break of a strong level we'll get a retest before a continuation. So this weak rejection was the retest, which is this bullish candle we are seeing. So price retest that area, and you should understand this: price does not leave that area immediately, very aggressively, that you miss the entry. That's why you don't need to be the first to take your trade at key level. Being the second or third is still okay, as long as you are making money. So once price pull back to the area, this for a retest, price not just leave the area. This is a 1-hour candle. Price consolidated around that level for a while and show us sign and confirmation that this level is holding, that the retest is happening. And this is 2-hour candles before price finally decided to leave that area by this candle. If you scale down to your 15 minutes, you can see that price hold this level for a while. Let's scale down to the 15 minutes time frame. So you can see price not just leave the area, price was consolidating, showing us, you can see we have 4-week rejection when price got to this level. So there's no way you will miss the entry, and even though you miss the entry here, price pulled back again to create what we identify as a double top pattern. You could have entered here. If you miss the entry here, you could have taken the sell around this level, and as long as your stop loss is above this level, the key level here where price has broken, you are still in a good position. This is your safest stop loss above the level, above this level here. So if your stop loss was here and price, let's say you took the sell here and price pulled back and came back to the level again, you can see you will still be in the trade because your stop loss is in a safe position. So as long as your stop loss is safe in this position, they are good to go. And as you can see, once price created the double top pattern, price continued down. So what I want you to understand is, the first tip is, if you are going to trade the trend line strategy, after you have drawn your trend line, wait for a clean break of that level, and you need a candle close, a higher time frame candle close. Either wait for a 4-hour candle, higher candle close, or a 1-hour time frame candle close to validate the trend line break. And when that happens, if you're a break and retest trader, the next phase is to wait for a retest of that level. Wait for price to pull back to the level it has broken and show a sign of failing to break above, so that we'll sell the market back down in continuation of the overall trend, which is now down. So once that happens, that's the only time you sell the markets. But if you're a breakout trader, you can set your sell stop order slightly below the level. Once the price start breaking the level, make sure your stop loss is above the key level. So you can see, if you're a breakout trader or a break and retest trader, the same principle apply. As long as your stop loss is above the level, you are in a safe position to take your sells. So these are some of the few tips I like to share with you on the trend line strategy. And if you have any question, drop it in the comment section below. And I also want to tell you guys, we have a Forex master course on Zoom. So if you want to expand your knowledge, or you want to scale up your trading career, check out the video description. There's a Telegram or WhatsApp link. Chat me up and you get more details about the Forex course. I also have VIP signal groups. If you want to be part of that, daily high probability signals, chat me up. I'll tell you the details about how to go about it. If you're a skilled trader and you want to scale up your trading, there's a profile recommendation in the video description. Check it out. You get discount when you use the link below. So that's it for this video. Hope you guys gain some value from the video. If you did, subscribe to the channel if you're a new viewer and give us a thumbs up. Thank you and see you next time.